Hello. About 3 months ago, I recorded my views about how businesses should prepare themselves to survive the COVID pandemic. Much has changed since then. It keeps changing, even in the last 24 hours. So I thought it would be a good idea to review those changes, some good, some not so, and see where this leaves us today. The good news is that there have been some improvements to the situation. Deferred VAT, which was due to be paid back next March, can now be spread over 11 months. The repayment terms for bounce back and CBILS loans have become much more favourable, with the option to extend from 6 to 10 years. This is going to be a lifeline for many businesses. The loans remain open for further applications until the 30th of November, with the banks having another month to approve them. I would urge any business unsure of its future going into next year to take advantage of these opportunities if they can. The job retention or furlough scheme finished at the end of October to be replaced by the job support scheme. This is much less generous than its predecessor and is likely to be of less interest. However, yesterday, the Chancellor announced a further extension to the scheme for businesses in the restricted areas, and this is likely to be of much greater assistance. Yet again, though, all of the emphasis has gone on to job support, and I do worry that this ignores the ongoing costs that businesses have, fixed costs, utilities, finance charges, which have to be met. And unless there is a way to give support for these costs, then the support to employment measures is going to be futile. One thing to remember, though, is that for businesses who have furloughed staff, the bonus entitlement becomes payable in January, and employers should make sure that they check their entitlement to this. However, not all of the news is good, and several changes are likely to work against business interests. The temporary suspension of restrictions related to wrongful trading have been removed, so directors must not allow their businesses to trade insolvently, or they risk personal responsibility for all debts incurred after that point. They need to look out for warning signs: declining order books, costs and margins being under pressure, difficulties finding money to pay their suppliers, and ensure they get advice from a professional, because in these circumstances, they must put the interest of creditors ahead of those of their shareholders. Particularly worrying is the reintroduction of Crown preference from 1st of December, which means that HMRC jumps ahead of the rest of the creditors in the queue for repayment by insolvent businesses. At the moment, banks with a floating charge have first claim on everything behind a fixed charge and certain preferential creditors. Inevitably, they're now going to look very closely at the situations, because they will rank behind the revenue in the queue, with many cases the companies owing a lot of money in terms of VAT, PAYE, etc. to the revenue. Businesses with overdraft facilities may be required to give fixed charges on their assets, give personal guarantees, or worse still, have their facilities withdrawn. They must assess the implications of this change on their own business in the very near future. They should also determine whether they're in breach of banking covenants. For example, companies benefiting from the 3-month extension to file their accounts at Companies House may be contravening the terms of their loan agreements. Other technical and performance breaches may be occurring, all putting a business in a weaker position when dealing with the bank. So it's vital that they obtain expert advice at an early stage on the implications of any breach and talk to a good firm of lawyers. Returning to HMRC, we can expect a change from the supportive approach which has helped many companies since March. They've been very clear about their intention to come down heavily on businesses who have overclaimed on the furlough scheme. The amnesty date for corrections has passed, so any overclaims should be reported quickly, at least with the hope of mitigating the size of penalty imposed. It's tempting to think that the government might deal with the impending unemployment crisis by recruiting an army of investigators to check on fraudulent bounce back and CBILS loans claims, or the misuse of the funds through those loans even when they were legally claimed. It goes without saying that beneficiaries of the schemes should adhere to the rules. The biggest problem facing businesses at the moment is uncertainty, and particularly in leisure, hospitality and tourism. They don't know how long the pandemic will continue to wreak havoc or if they can survive. Strategically, a plan for the worst, hope for the best approach should be adopted, focusing on the core priorities of cash flow, forecasting and communication. And finally, as if all of that wasn't enough, Brexit. The negotiations still haven't concluded, so we don't know where we're going to be at the end of the year. Inevitably, though, many businesses are going to have significant problems as a result. There is a great deal of free advice and support and grants for education available at the moment. So if you're involved in import or export, you should look to take advantage of this. Coming back to the priorities, an extensive cash flow forecast remains vital. It needs to cover at least a 52-week period, better still, 18 months. The further priority is to have a business forecast based on the most realistic assumptions available at the time. A sensible approach is to have both a best case and worst case scenario, thereby flagging up potential future issues. Communication is crucial. Again, talking to the staff, banks, landlords, other professional advisors, insurers, to anyone with a direct involvement with your business. The business community is still, by and large, being mutually supportive, and businesses should take advantage of the help and advice that is available. Finally, if it ultimately becomes clear that the business faces insurmountable challenges, they should speak to an insolvency practitioner. Their experience and expertise may provide a solution or a range of solutions and options that haven't been previously considered. The main theme of this talk has been for businesses to contact and keep in touch with their professional advisors. I'm happy to help with recommendations as to good advisors or even do some of the work myself. So if you need any help, please get in touch.